Awesome. Well, this is our overnight trading webinar. I've got several things to share tonight. Tonight we'll go over how to trade the strategy. I'm also going to give a few extra suggestions. Um, I'm going to share the traditional rules with the strategy, but also give you some extra suggestions that I think will be very helpful. Um, like for example, like how much padding to add on at the end of your Sydney box and things like that. I think that could have been a little helpful for some of us last night. Um, and so, yeah, I'll go ahead and share that with you guys. I think that'll be really good. But yeah, let's go ahead and get started. Before we jump into our overnight trading call, as always, need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. Real quick, actually, I want to show you guys some stuff that I put together this afternoon. So I kind of did a lot of updates to the website. Probably the most updates I've done this year. I've done in the last like 2 days. So I'm just going to show you guys a couple of things that I've done. We have one more thing that we're also actually two more things that we're working on right now. Right now, we're putting together our overnight trading PDF book, which will be really nice. It'll be something that you guys can have and that you'll be able to download and be able to view, which will be super awesome. That is almost done. Hopefully tonight I finish that. I've been working really, really, really hard. So hopefully that gets done and then everybody will be able to start using that. And then the second thing that I'm working on is I'm building this scalping signal alerter. So this is going to be for those that want, it's like another scanner, but for scalping. So Steve's scanner is going to become more of a longer term signal alerter. And then I'm going to give you something a little more short term that's not so caught data based, but more based off of sentiment, more based off of the actual market conditions. And so I'm going to provide that, which will be super awesome. But I added several things. A lot of you guys saw this morning. We have this strength meter that you can use. I don't have time to go through everything because this is the overnight trading call. I just wanted to show you guys a few things that we've got here. But you've got this risk of ruin calculator. We talked about that this morning. I added this compounding interest calculator, which is really cool, very useful if you're trying to project the growth of a strategy over time, which is super awesome. Also added lot size calculator, so you guys can use that for the overnight trading strategy. We'll probably actually use this together today in the call. Got this tab called live market data, which is super nice. This is awesome. It's going to show you like basically every major index fund, futures, bonds. You've got Forex right here. This is super nice. And then you've got news and economic calendar. I actually revamped this afternoon. It used to be just the economic calendar, but I also revamped it so it includes the top stories with Forex, stocks, and crypto. So if you ever see a big move in the market and you're like, what the heck happened? Just come here and, if it's something to do with Forex, stocks, or crypto, it's going to show up right here, which will be really, really nice. And I've got these separated, which is super awesome. So you're only going to get crypto news here. You're only going to get stock news and Forex news over here, which is nice. And then down here, as you guys know, here's the economic calendar. And this is my favorite economic calendar on the internet. And I'm so glad it's on our website. Basically, I just like to filter by high impact news events. And so now you can see just the high impact for the week. So you don't have to like comb through and be like, oh, what's on Thursday? What's on Friday? It's just all right here. You can just come in here and it'll tell you like, okay, this is what's for today, highlighted in bold. And then you've got, Wednesday, you got Thursday, Friday, right? Obviously, the big thing tomorrow is the FOMC meeting. That's the only thing tomorrow that we know of. Then we've got the correlation filter. We talked about that this morning. We've had sentiment. Those are all free things. Now I've added a few things to the members section. And again, we're not done. We're adding a tab called strategies, and it's going to have books on the overnight trading strategy, the 3-bar reversal, the banker's close strategy, the price action break and retest strategy. Like it's going to have everything, which will be super nice. So you'll be able to just read through. It'll have some video resources, which will be super awesome. But I added this today. This is called heat maps. And so these are heat maps for every market. Stocks, you got heat maps for crypto, we got heat maps for commodities and futures. Here's one for Forex. So basically, what a heat map does is it tells you um, like what the hot thing is right now, and it'll tell you like these ones with stocks are cool because it shows you kind of a visual of by market cap. And so like these are some of the biggest stocks, and I'll tell you if it's up or down for the day. So if you see this all red, then it's like a down day in the market. If it's all green mostly, then it's an up day in the market. Um, and then you can kind of comb through that, which is kind of nice. And then down here, I love this 4X one, this 4X heat map, because down here you've got um, you can actually see what are the big movers so far. Like right here, you can see this highlighted in dark or bright red is the Aussie JPY. So that one's already off to the races so far this afternoon or this evening. So awesome stuff, guys. All right. Let's see. I think. Oh, and then is there one more thing? Oh yeah, there's this right here. This is called technical signals. This is pretty cool. This is actually very useful for somebody who wants to do some scalping. I added this little matrix. Let me see if I can get it. I just added this afternoon, so I may need to do some things with it and debug a few things, but I think it's still loading. It takes a hot minute to load. So I need to figure out how to get it to load a little faster. But this is kind of cool because it looks at, oh yeah, it's having a tough time here. Um, I'll have to work on this, but it's super awesome once I get this to load because it looks at all the different, oh, there it is. Perfect. Yeah, it looks at all the different major technical indicators like MACD, RSI, stochastic, ADX, CCI, the Arun indicator, alligator, and SAR. And it basically looks at every single time frame and it will tell you based off that indicator if it's a buy, sell, or whatever the signal is. And you can kind of comb through the different currency pairs here. I've got way too many, so I need to kind of filter this so it's just currency pairs or maybe currency pairs and a few other things. But you can comb through that or just search for the ones you want, and then you can see what the signal is based off of a technical indicator. So if you're interested in technicals, this is a really cool thing that is now exclusive to just members. So I'm sure we'll be using that, especially for those of you that are interested in maybe more scalping, looking for shorter term opportunities. So that's super cool. A lot of stuff to dive into. We don't have time in this call. That's not what this call's for, but it's going to be super awesome. All right, guys. So let's get into the overnight trading strategy. Let's go over here to the journal. So let's talk about first, let's just talk about what the overnight trading strategy is and what we're trying to accomplish with it. And then we'll get into the details of how to trade it. And then at the end of the call, I want to show you a back test that I did that I think will be very eye-opening. It's a new back test that I did on the euro dollar. I did it yesterday. I think you guys are going to really love it. It kind of shows you, um, it just dives in. I think what's going to be eye-opening about it is the probabilities concept, how we're working within the realm of what the market is, what the market can and can't do, and the probabilities of the overnight trading strategy. So I think you guys will really love that. Okay, so let's dive into this. So the overnight trading strategy that we teach is a breakout strategy. Basically, what we're trying to do every single night is we're trying to capture the London market. So the London market accounts for 73% of all foreign exchange transactions that happen in a day. And so it's a lot of volatility. In fact, this is the euro dollar right here. So this is a very active, this is the most popular currency pair in the entire Forex market. And this currency pair experiences a lot of movement during the London and New York sessions. Prior to the London and New York session, you have the Sydney market. Specifically, prior to London is Sydney. So Sydney opens at 6 p.m. Eastern and it closes at 2 a.m. Eastern. Okay, so it's basically the evening in the United States is Sydney. Now, the Sydney market is the most underwhelming market in the entire 24-hour period that the market's open. This is important because when the market's slow, when Sydney is slow, um, these currency pairs don't really do much. But you have basically Sydney that's side by side to London. So London's the biggest session in the entire market. And then Sydney's the slowest, and they're side by side. They're like an hour off from each other. So Sydney closes at 2 a.m. Eastern, and at 3 a.m. Eastern, London market opens. And so when London opens, you get this massive spike in volatility. Okay. and it's going to cause these huge moves. So to put this in perspective, I'm going to use this thing called sessions. It's an indicator on TradingView. It's free. It basically just indicates, where Sydney is, and it'll show you where London is and so on. I'm just going to have it show me Sydney. So in this light blue area, those are the Sydney sessions. We're actually in this call right now, just starting the Sydney session about an hour or two ago. And yesterday, this light blue area is Sydney from yesterday. And you can see the euro dollar did not move much in this period. But what happened right after this period closed? Boom, right? It took a little bit, like it actually took a few hours into it. But this morning, when London and New York overlapped, this euro dollar just took off with huge, insane amounts of volatility, right? This is key because this is basically the edge of the strategy. We're trying to take advantage of the fact that that London is going to have a big breakout. We don't know which way London's going to go. We don't know if it's going to go up. We don't know if it's going to go down necessarily. We could have our hunches, but that's not the strategy. The strategy is to take advantage of volatility, right? And so what we do with this is the strategy in a nutshell is basically you're going to box up the Sydney market. So whatever Sydney does, you're going to highlight the high of Sydney, which yesterday that was about kind of in this area right here, kind of like that whole area was a high. And then the low of Sydney was right down here. And you're just going to box that up. So you're going to put your box at the top of the high. In fact, I'm going to delete this. You basically just go ahead and draw a box from the top of Sydney and draw a box from the bottom of Sydney. In fact, let me delete this whole thing. Let's go and delete all of this. You're just going to highlight the top and the bottom of Sydney. Okay. That's basically what you're doing. That's it. And then what you're going to do is you're going to go ahead and place a buy stop at the top of Sydney. And you're going to go ahead and put a stop loss at the mid range of the Sydney session. Okay. And then what you do is you put a target 5 times the risk. So whatever you're risking, you increase the target by 5 times. And then you do the same thing with the sell stop. So you're taking the exact same trade, but this time for a sell. And it goes halfway, the stop loss goes halfway through the Sydney session. And then you're going to bring that target 5 times whatever you're risking. So if you're risking 8 pips, you're going to go for 40. If you're risking 7 pips, you're going to go for 35, right? That's the idea is you're going to have a take profit that's 5 times whatever you're risking. So if you think about it, you have to place your stop loss first, because unless you know your stop loss, you can't place your take profit. You have to know how many pips you're risking first to know how many pips you can go for. So you're going for 5 times whatever your stop loss is, plain and simple. Every night it's the same way, both directions for the buy and the sell. So the idea here, guys, is that if the market So the idea here is that you're going to take the market whichever way it wants to go. If it wants to go up, we'll take it up. If it wants to go down, we'll take it down. We don't care. We'll just take it whichever way it wants to.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders, and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Okay, so the benefit to this, let's talk about the pros and cons of this concept. So the biggest pro is we're taking advantage of volatility, right? It's a volatility strategy. We're just trying to capture a big breakout that's anticipated, that's very likely to happen. Um, we're just taking advantage of sheer volatility, right? Okay, so that's a pro is because volatility creates opportunity, right? Now, what are some cons to this style of trading? Um, well, actually, let me finish on the pros here. And then we'll get to the cons. So, the ideal situation for this is that the market will just have a clean breakout every night. So, every night you set this trade up, you just want the market to break out perfectly. Just clean breakout, boom, triggers your buy stop, and then the market goes 5 times your stop loss. You wake up to a profit taken and you're done. Okay. That's awesome. Now, what if I told you this? And a lot of you guys already know this, but I'm mainly speaking to the people watching this in the recording because I've seen a lot of you guys here before in these past calls. But what if I told you that this is only going to happen 5 to 8 times a month, right? So out of 22 trading days in a month, you're only going to get 5 to 8 of these that are going to hit. Okay. So that means that 12 to 14, maybe 14 to 16 times in a month, you're going to lose, right? So this is common, but it's not all that common to happen every day. In fact, this is going to, if you want to be very specific, this type of a breakout is going to happen about 27% of the time. So a lot of folks might look at this and be like, well, that's not a big enough win rate for me to be excited. Because when I talk to most traders, they are really interested um, in the concept of getting like a higher win rate. In fact, the book I'm writing right now on the overnight trading strategy, the little PDF I'm putting together, has a whole section on this concept, examples, and oh, it's awesome. I'm excited, and it's much more well worded than just me talking in a call. So you'll get straight to the point examples. It's really, really nice. So I'm excited to kind of mass produce that and share that with people so they can understand the concept better. But yeah, so when I talk to people on the phone, I talk to people all over the country every day who are aspiring traders or who are current traders. And I would say the most common question I get when it comes to risk management is people ask me, hey, what's your win rate with your strategies? This is like the number one question I get all the time. And I think I know why people ask that question. I think it's because people emphasize win rate. And the other reason why is because from a psychological standpoint, when you're winning, when you're winning most of your trades, I think it's generally understood that you're profitable. Okay. But that could be nothing could be further from the truth, right? So just because you're winning all the time has nothing to do with your profitability, right? Because that's not the only variable that creates your profitability. Just because you add sugar to cookies doesn't make them tasty, right? There's so much more that makes a really good chocolate chip cookie. Do you see what I'm saying? There's more to the recipe, just like there is to trading. So when we trade, we have to get high win, not a high win rate, but our RR ratio needs to be really good. So let me tell you another thing too. Most of the people that have ever passed prop firm challenges, including myself, when I go back and see the prop firms that I've passed and the prop firm challenges that I've failed, nearly all the time where I've failed, my average win to average loss has been less than my average winner. Okay, so when I pass a prop firm challenge, I was actually looking at one of my prop firm accounts this morning, and when I was looking at my statistics, clearly my average win is much bigger than my average loser, and that prop firm account is doing great, right? And so this is a concept that a lot of traders really struggle with because they're not used to this style of the trading when but the reality is you should be trading this way. You should be having trades that win much, much more than your average loss. But the discipline to be able to carry out and execute said strategy is a whole conversation. I think people don't realize how difficult it is to actually execute a strategy without fail. So many things come up. You know, you kind of get weak knees when, for example, you're going to learn about the sequence. A lot of people get weak knees when they get down in the sequence territory, right? Like after several days. And they chicken out and I've done this too, by the way. So I don't want to say I'm not calling anybody out because I've definitely been guilty of this. I'm just trying to point out where I've seen the flaws in myself and with others is that if you don't have the discipline to stay with it, any strategy you try out will fail someday, right? So, but I guess back to the main point I want to make is if you look at this setup that we've drawn out here, this strategy clearly has a higher average win than average loss. So, the first thing I want people to realize when they see this is that you're going to experience a pretty dismal win rate. Okay. So, you are going to win, or excuse me, you're going to lose most of the time. And losing most of the time doesn't mean that you're unprofitable. In fact, I have found that losing most of the time could actually mean that you're very profitable, assuming that your average win is much, much greater than your average loss. Okay. All right. So recognize this from the get-go. If you're brand new to this strategy or you're watching this for the 10th time, that is the nature of this, is that the baggage of this is you're asking for big wins and small losses, but more frequent losses. So let's talk about some of the cons. We've already kind of talked about them, but let's go through the scenarios here. So during a day's time, the market while you go to bed, it could go up and just straight go to your target. That would be perfect. One scenario is the market could, after you go to bed and set this up, the market could go straight to your target down here. And that would be fantastic. We don't really care which way it goes. We just care that it wins, right? But another scenario that's pretty common, this will happen about 2 to 3 times a week. So you're going to trade this 5 nights a week, Sunday to Thursday night. And one of the big cons with this is you're gonna hit your stop loss 2 to 3 times a week, both directions. Okay. And I'll tell you what, it's not fun. I had a couple of accounts this morning that lost both ways, and that was not fun. Um, and so, unless you're prepared for that, it has a way of influencing your day. So you kind of have to put on you have to almost take a spoonful of cement in the morning and not let it affect you. Because I'll tell you what, it definitely affected me the first time I started trading this strategy. If I lost both ways, I wanted to give up, or I just wanted to, not keep doing this. And it can happen several days in a row sometimes too. You can lose both ways 2, 3 days in a row, and you're like, what the heck? This is annoying. And it happens. Okay. So it's definitely annoying. Now, what's another scenario? One scenario is the market could trigger your buy, let's say, but then it comes back, hits your stop loss, and then goes back up. That happened yesterday, actually. It barely nicked my stop loss on the buy, and then it was just off to the races for the rest of the day. So that's almost more annoying because you realize that you could have won, but it just hit your stop loss by a pip or two. That's terrible. But it is part of the strategy, right? And so there's nothing you can really do about that when that happens. I know there's a temptation to want to change the strategy because you're like, oh man, if I had just moved my stop loss a little bit more, I would have been fine. Thing is, guys, it's going to do more harm than good by changing that. Trust me. Here's why: because you don't realize what you're changing if you change it. Because just by moving your stop loss an extra 2, 3, 4, 5 pips to avoid, you know, that one anomaly day, it's going to affect every day going forward. Because what happens is if you move your stop loss further out, then you're going to need a bigger target, and you're not always going to get that every day. Then you're going to need to have a smaller contract size because you can't afford the risk, right? There's so many things that get messed up if you start messing around with the strategy. So, um, You may get a higher, like for example, somebody reached out to me and said, "Hey, why don't you actually put the stop loss just on the other side?" So this is actually a pretty common way to do it, is just to put a stop loss on the other side of the breakout. So like if this is the Sydney session, put your buy stop here, sell stop here. This is pretty common to trade the London breakout this way. But look what happens to your take profit now if you do it this way. Now your take profit's all the way out there. That's tough, guys. That's really hard to make real money when your stop loss is that wide and then your take profit's so far away. So it will affect your profitability if you start doing stuff like that. So I highly recommend that you stay on script. Um, I I know that there's going to be plenty of times where you hit the loss, um, and it whips one way, but trust me, it's worth it. Okay. And we'll talk more about that in just a moment. Okay, so I hope this makes sense. This is the setup. So basically, you're doing this every night, and you can do this at any time at night you want to, depending on where you live. I usually do it at 10, between 10 and 10:30 now. I used to do it at midnight. Turns out that's not sustainable. So I do it between 10 and 10:30 now. That's mountain time. So that would be between like midnight and 12:30 Eastern. I know a lot of folks who live on the East Coast are doing it at 10 or 10:30 their time, and so they're basically doing it 2 hours earlier than me. That's okay. Like you can definitely set it up early. Most of the time, the breakout, this Sydney box, is going to hit its high and low within the first 3 hours of the session, anyways. And so a lot of the times we've already discovered the Sydney box in the first 3 hours of the evening anyway. So you're good to go. You should be fine. That's what I'm saying. It doesn't matter where you live. Just set it up when you can. Make it one of the last things you do before you head to bed. You can trade it no matter where you live. I just want to make sure that's very clear. Shouldn't stop you from trading this. Um, and again, don't make the excuse either. And I'm not calling anybody out. I'm just saying because this is important to recognize this behavior. But I know how it is when it's like, hey, I'm busy, or if you have kids or something. I don't have any, but I know it can get really stressful. So, um, if circumstances require you to do it at a different time, at a different night, that's fine. Just try to get a time where you can spend 10 or 15 minutes to get this in there. Whatever that looks like. I don't care when you do it, just get it in, and set up every night. All right. The problem is if you miss, and I've missed before too. So it's okay if you've missed. Um, it's okay. You can continue. But a lot of the times, like if I've missed a trade, I have to restart my sequence, especially if there was a win the previous day. Um, and I've had that happen a few times where I've missed the trade because I was camping or with family or something and I couldn't take it. And lo and behold, I find out the next day that it would have won had I set it up. And so I'd have to just restart my sequence. So let's talk about the sequence. I think that's the next thing we should talk about, unless you guys have questions about the setup. I actually do have one more thing I want to share on the setup. I think it's a good idea, by the way, guys, to add a pip or two on the high of Sydney and the low of Sydney. Just add a pip or so on your box. The market's highly manipulated. And so I wouldn't put your buy stop just right snug against the high of Sydney or right snug below the low of Sydney. I'd put it a pip or two off. Okay. Just a good recommendation. Get your buy stop a pip or two off would be great. And that goes for all sessions. Like if you trade the New York breakout or Tokyo breakout, I highly recommend that you do that. I think that's a good thing to do. Um, see what else to cover there. I think that's basically it. Oh, and then on your box, when you draw your box out, like I said, your stop loss is halfway through that, halfway through the Sydney box. If your box is smaller than 12 pips, that means your stop loss would be 6 pips each. But if it were, let's say your box was 10 pips, that would mean your stop loss would be 5 because you're doing half the Sydney range. Now, here's the thing. If you have a stop loss that's less than 6, force it to 6. Okay. I don't want you guys ever taking the overnight trade with a stop loss that's less than 6 pips. So 6 pips is the minimum. We've had some issues with this where people have gotten tripped into trades with stop losses of like 4 pips on some nights, and it's just not enough risk to take. So you do need to give the market some breathing room, and 6 pips seems to be the lowest I'm willing to go with the strategy. So most nights you won't have to worry about that. Like last night, the range was about 16 or 17 pips in Sydney. So my stop loss was about 8.5 or 8 pips. Pretty easy setup. No anomalies there. And if you add a pip of padding, that could put you closer to 9 potentially. But yeah, that's kind of what you're doing. Okay, let's go to the sequence multiplier. So the other part of the strategy is this right here. So let's look at this. This thing is called, like I said, it's just called a sequence multiplier. Now, this is like the secret sauce behind the strategy. Now, hear me out here, guys. So this is a concept I've really put a lot of thought into, and I know I might be a little complicated to understand just because I've been trading for 12 years, but hear me out if this resonates with you. So basically, the way the markets work is they're random in nature, and so the market can't do the same thing over and over and over again. It's just impossible. It would go against the laws of nature. It has to mix it up. Okay, it's the same thing with like trying to think of an example. Like, it's not always raining every day. Some days it's sunny, right? It can't rain every single day, or it can't be sunny every single day. I had that like last month in July here in Utah. It was mostly sunny. Last 2 weeks, it's been kind of like a monsoon over here. We just had tons and tons of rain. So it gets the market mixes itself up, right? There's this randomness feature, and the market does the same thing, right? Okay. So because of that, some nights, actually go back to the chart real quick. Some nights the market's going to just break out perfectly. It's just going to be a clean breakout. And other nights it's going to go one way and then it's going to whip the other way and so on. It could even whip the other way again. So that's a whipsaw like market. Now, if the market were to just do a breakout every single day, think of this, guys. If it were to just break out perfectly, you know, no whipsaws, no nothing, just perfect breakouts like clockwork at London Open, we would all be rich because we could just easily just max out our lot size. And if the market just broke out perfectly every single night, we could just, like we'd all be rich because that's what the market did all the time. So that's why I say the market's random because it's not going to do the same thing every single night. Some nights it's going to be a breakout, some nights it's going to be a whipsaw, right? So the market's really good at being random, and this is important because it's good at being random. That's why the sequence multiplier works. Basically, we're trying to take advantage of the fact that the market is random in nature and it's not going to do the same thing over and over again in perpetuity. It's going to have to mix it up, right? So every night we go with a game plan to take advantage of a breakout. We don't know if tonight's going to be a breakout, but we're going to take advantage of it if it is. And so we go in there kind of with a smaller contract size. I start with a 0.25% risk the first night I take a trade. The next night, I use it like if that night loses, I log it in my journal as a loss. And then the next night I come back, I take the exact same trade again, but now with a slightly larger lot size, which would be 0.38%. If that trade loses, I come back, I journalize that in my journal. The next night I come back, I take the exact same London breakout trade again, but this time with a 0.57% risk. And so on. And I continue up to 6 days. And the highest risk I get to is 1.94% per trade on the 6th day. And so if I don't get a win by the 6th day, that we would call that bust, and you would restart the sequence back at 0.25. Now, if you get a win, let's say you get a win on day three, let's say, first 2 days are losses, the market whipsaws, and then day three, you get a perfect breakout, you just win, and you win at 0.57, you're going to make quite a bit of money on that trade. And so what you'll do is you'll default back the next day back to 0.25 and you'll start a new sequence over again. Okay. So you're basically increasing your contract size up to 6 days until you get a win. Or if you don't get a win, then you would eat those losses and you would come back and start over again. And we call that bust if that happens. By the way, I want to normalize bust because I know it hasn't happened to us on the 1.5 multiplier yet, but we've had 2 days, 3 days so far in the last 3.5 months where we've gotten to day 6. It's 2 or 3 days, like three, 2 or 3 sequences in the last 3.5 months where we've gotten up to the 6th day with no win. And so I just want to normalize the fact that like if you're using what we call the 1.5 multiplier, which is the one I'm using, this sequence right here, eventually you're gonna hit it. Just trust me. If it hasn't happened to you yet, it will. It actually hasn't happened to me yet, manually trading. So I'm trying to prepare even myself for the day when that happens, but it will happen. And so I actually had a question on YouTube today. A guy asked me, like, well, what happens when it doesn't work? Because I see the idea. He's like, well, if that just keeps working, what happens when it doesn't work? Well, I plan on it eventually not working. And so when you get to day 6 and there's no win, that stinks. You're going to eat 2 or 3 weeks worth of losses just like that. And then you'll just have to restart. The reality is, though, this strategy has made a 38% return in the last 3.5 months. And the worst loss you could potentially incur by hitting bust is a 6 to 11 or 10% loss. And so if you make 38%, but then you lose 6% or you lose 10%, okay, right? Like that's fine. It's fine to hit bust. That's why I say I want to normalize bust because um, if you make that much money by following the sequence diligently and then you hit bust, it's okay because you made so much before, like in the previous months, you made so much, you're fine, right? So like I said, I just want to make sure that that's very clear. Okay, so this is the journal. So it's very important. This is another key component of the overnight trade strategies. You've got to use a journal. Okay. If you choose not to use one, I can probably tell you in 2 or 3 weeks, you won't be trading this strategy. The reason why you have to use a journal every day is because you have to keep track of where you are in the sequence. So if the first day, like for example, I'm in the middle of a sequence right now, first day on the 16th, well, let's do this. I hit a win on the 15th. On the 15th, I won at 0.25% on a 100K account. I hit a 35 pip take profit. I made $1,250. The next day, the 16th, I lost one direction. It was a buy that unfortunately lost 0.25%. I lost $250. Okay, so the next day on the 19th, now we flipped to over a weekend. That was a Friday morning. I woke up to a loss. So Monday morning, I wake up to another loss and I lost at 0.38% minus $380. Okay, the next night, the 20th. This was last night. I lost both directions again. Actually, this is the first time in the sequence so far that I've lost both directions, but I did lose both. 0.57% loss, and it was $570 a piece. And that's on a 100K account. So that's a little over a 1% loss last night. Stinks, not fun. Is it normal? Yes. Like you can like if we don't normalize a 1% loss, I don't know how you'd pass a prop firm challenge. You've got to risk some money to be able to pass, right? So I think a lot of people look at those numbers and like, oh my gosh, I can't imagine losing $570 on two separate trades. Like that's crazy. It's like, well, it's a 100K prop firm account. So I mean, what else are you gonna do? Not, I mean, if you don't risk money, you're not gonna make it, right? Like you have to risk money to make these types of profits, right? So, and let's put it this way, if that's very concerning, one of the things you can do is you can use a lower multiplier. We'll talk about that in just a moment. But there are ways you can limit the risk and still take trade the strategy, right? Okay. So tonight, when I take the trade, since I still need to continue the sequence to finish, I got 3 more days in my sequence to get a win. So tonight, I'm going to be trading with 0.86%. And I'd love to see a win tonight. If I don't get a win tonight, then I got another night. I'd go to 1.29%. If I don't get a win tomorrow night, assuming again tonight I don't win either, then I would have one more night to trade and I would trade at 1.94%. And then we would go from there and see if we could get a win. Okay. Let me show you what this would look like real quick. Let me actually go ahead. Um, um, let me show you. Um, let me show you what this would look like if we were to fail. Okay. Let me just show you what a failure would look like real quick. Okay. I want you guys to see what this would be like. So this is the 21st tonight. Then we got the 22nd and then we got the 23rd. That's it actually. So I'm going to go ahead and delete. No. No, that's it. Okay, perfect. So if I don't hit a win this week, I would hit bust. Okay. So what this would look like is, let's say I took a trade tonight and it lost as well. I would lose that. Then I'd lose $860 on that trade, assuming I just lost one direction. And then if I took another trade the next night at the next level of the sequence would be 1.29%. You can see that in the matrix right here. 1.29 would be the next one. And then the next night would be 1.94. Let me show you what the potential loss of this would be approximately. It depends on if you lose both ways as well, right? Okay. So if I lost every single night, this is actually what I would end up losing. Okay, so let me show you guys um what the sum of this loss is. So equal sum, it would be a minus $5,860 loss. So like I said, close to 6%. Now, one of those nights I'm probably going to lose both directions as well. So it's going to be anywhere between, so this is like we call this a shock test. Um, like people shock their balance sheets to see what would happen under extreme circumstances. We are doing that right now. So a lot of people are very skeptical of this strategy because they're like, "Oh, you're increasing your risk." I'm like, "Well, we have caps on that." See, this is the thing. If you put caps on yourself and you have, protocols and things that you do when certain things happen, you know your numbers, right? So I'm trying to show people what your numbers are. Okay. A $5,860 loss is nearly 6% of a 100K account. Okay. If you were trading $10,000, your loss would be $580 approximately, $586. Okay. So it's all proportional to whichever account size you're trading, right? So would that be an acceptable loss on a 10K account? It would be, 6% is not fun. I mean, you could lose that much, but it would be an acceptable loss in my book. If 6% is too big of a loss, then you're going to want to use a smaller multiplier. Okay. And we have that for you as well that you can potentially use. Okay, so this would be your loss right here. If, like I said, if this didn't work out. Now let me show you what happens if it does work out. So let's say we lose both nights, the next two nights we lose, but then we win right here. Okay. Look how big this win is on the sixth day. Okay. That's a $9,700 win. Why is the win so big? Why is that win so big? What's going on here, guys? There's two things at play. You have a RR ratio that's 1 to 5 on the chart itself. So you have the chart itself asking for 5 times the stop loss. That's number one. That's the number one thing that's causing such a big win versus loss. Now, what else is contributing to such a huge win? What's the other variable? Bigger lot size, right? This is the biggest lot size in the sequence and also the biggest RR win, right? Well, that's the only win in the sequence, right? So you have a 1 to 5 RR win, plus you have the highest lot size. And so all those things to get combined together to your favor. And that's how you're able to sneak out such a huge win from the market. Okay. Now watch this. So if you do equal sum from that win plus all the subsequent losses leading up to that point, you're now left with a net. That's net, guys, not gross. That's net $5,780. And then you just close the sequence and you start the next week ready to go at the default contract size. So because that net is so big, look how quick, look at this. A lot of people are so afraid to go bust. That net is basically the same profit of going bust, which we haven't had happen yet. So that's why I want to I want to expel these fears of hitting bust because it wouldn't be fun. Trust me. I mean, I've done it on different accounts on different multipliers, but it's not fun. I hear you, but I do want to dispel those because look how if you are actually disciplined and are diligent to follow the sequence, you can actually recover your losses. You can definitely recover your losses. Okay, so I just want to point that out that um, I think that's just an eye-opening topic because I do get a lot of flack just from folks who haven't tried it or haven't Usually it's from people who have never tried it, or it's from people who haven't been diligent in following the sequence. Because let me tell you, and a lot of you guys can relate with me on this, because I have felt it too. Maths, right? Like the math is mathing, but it's really hard in practice to follow through. Like if you get to day six, which has happened to us several times, if you get to day six without a win, like that's tough, guys, right? No one wants to get to day six and not see a win and they only see losses piling up, right? It's not fun. So, real quick, I got to move on. We got the last 15 minutes. I want to share for some back testing that I did on some stuff that I think you guys will really like. But I just real quick want to share some of this right here. So if you're concerned about not hitting a win within 6 days, here is an option that provides 10 days right here. This is the 1.25 multiplier. So you can adopt this one for your overnight trading strategy. And so the idea here is that you just have to get one win in 10 days to be profitable. Now, does this one provide 4 extra days? What's the pros and cons to this? So basically, this is less risk because you're not multiplying as quickly. And so therefore, you have more opportunities to be successful, right? If you don't hit a win within 6 days, you've got up to 10 days to get a win. That's 2 full trading weeks to just get one solitary winner. That's all you need in 10 days, right? That's not hard to do. Like I've always so far hit a win within 6 days. And so I've never even needed so far the last 4 days. But if it gives you a peace of mind, knowing that you can get those 4 days extra, that's really, really nice. But what's the downside to this? So it makes between 40 and 50% of the net of the 1.5 multiplier. We only make in fact, I have the results right here on this tab. So this is the 1.25 multiplier. Instead, I employed the exact same trades every night, but with the 1.25 multiplier. These are the results. So it has the same win rate. It's taking the same trades, right? It's just lower multiplier. So your net profit, instead of being $38,000, it's 18,000 over 3.5 months. So you make an 18% return instead of, 38% return. But you're not likely to hit bust hardly at all. I mean, it could happen. I don't foresee it even happening in a 3 month period or a 6 month period. It may happen once in a year, perhaps, maybe not even. You might even go years with, so long as you skip the holidays. Because by the way, I'm probably going to skip the holidays just so you know, like the last week and a half of the year, just because that's not a good time to trade, anyways. But like if you skip that last week and a half in the year, I imagine that even if you traded it every day, you'd probably hit a win within 10 days. I don't see why you wouldn't at any period in the year. So there you go, right? Like that's a profitable approach right there. So there's a good option for you guys if you want to do that. The other one is the 2x multiplier, which by the way, we talked about this week. I'm going to just spend a minute here because I got to move on. But the 2x multiplier is actually more profitable than any of the multipliers. So you heard it here, right? Like that is the most profitable approach is to do the 2x multiplier. By far, it's a 56, 57% return in 3.5 months. But just so you know, what's the baggage that comes with this? The 2x multiplier has hit bust 3 or 4 times in the last 3.5 months. Yeah, so that's what I'm saying. Hitting bust isn't this hit bust 3 or 4 times in the last 3 or 4 months, and it's made a 56% return. So yeah, it's not the end of the world, but you can see those losses are hefty, right? Like here's a bust right here on April 12th. It got to day four, 2% trade, and all of those trades prior to that loss. So when that happens, you just have to return back to the default and try again, right? But you can see there's also some days where this really works out. Like here's a day on day four. This is July 3rd. Got to day four, no win, but then you got a win on the fourth day. Huge profit, like absolutely enormous profit. And it covers all the losses from the previous day. So I just wanted to share that. I got to move on from this one. If you guys want to come in here and check this out, just use this link right here. And bookmark this and you guys can come in here and take a look at the different tabs. Let me show you this one. So I got to spend the last few minutes on this right here. So this is so cool, guys. Okay. So this is what we call, I'm just going to call it the Reaper Um, Man, I wish I had more time on this, but we're going to go through our 12 minutes that we have left on this. So, unless you guys have other questions, hit me with your questions if you do. But this is called the Reaper. So, this is something that we came up with yesterday. And the idea with the Reaper is since statistically over the last 3.5 months that we've traded this, we've always hit a win within 6 days. The idea here is when you get to day three, the Reaper comes out to play. He enters the chat. Okay, so what does the Reaper do? The Reaper comes in and employs the 2x multiplier for just 3 days, assuming that they're going to get a win within 3 days. So since we've always hit a win within six, if the first 3 days don't pan out, the Reaper basically understands that within the next 3 day, the last half of that 6 day period, you're essentially guaranteed a win. I mean, as close to guaranteed as you can get, at least in the last 3.5 months, it's been guaranteed. So does that make sense? So you're basically saying over the last 3.5 months, we've always hit a win within 6 days. It has taken up to 6 days in the past sometimes, but the idea here is that the Reaper comes out if there's been 3 consecutive days of losses. If there's been 3 days of losses, then the Reaper, in his mind, he's basically saying, in the next 3 days, we're going to get a win because we've always hit a win within six. And so if the first three were losses, he's basically an observer. He's looking to see, like, are we losing multiple days in a row? He's like, yes, we are. Okay, so we're going to employ the Reaper. Okay, so what the Reaper does is he comes out and he risks. I'm actually going to go to the very beginning here. So he comes out and he basically watches for those 3 days of losses. There was one right here on May 9th, or I guess on May 9th was the fourth day because 3 days, we had 3 days. You can actually see those right here. Here's a loss right here on the 6th of May, losses both ways on the 7th, losses both ways on the 8th. And then so on the fourth day, he comes in and starts trading. So he actually doesn't even do any trading at all unless he observes 3 days of losses. By the way, you can view this tab in the journal I sent you guys. Just click on the link. You can view that right there. So he comes in, he takes a 0.5% risk at a 1.5 or 1 to 5 RR ratio. And then if that trade wins, he just, like I said, he just comes along. Oh, I need to change that right there. There we go. He just comes along and takes this trade. Um, and this was a winner right there. And then the next day he doesn't trade again because there was just he just had a winner. He looks for losses. He's like, okay, there's a loss here on the 9th. There was a loss here on the 10th, a loss here on the 13th, and then a loss on the 14th. And so that's 3 days in losses. So on the fourth day, like I said, he comes out to play, right? And then right here on the 15th, that was a winning day. So he basically misses all the losses. Like that's the whole idea with the Reaper guy. He misses all the losses. He comes out, joins the chat on the fourth day or the after 3 days of losses, he joins on the fourth day. Gets a win right there. Okay, here's a sequence where he went his full 3 days. So this is the one on the May 24th. This was the worst day in the sequence I think that we've ever had. And I guess the 12th of August was the same. This one took 6 days to get a win. And so because the first 3 days were losses, the Reaper joined on the fourth day. You can see Reaper lost on the fourth day. And then he also lost on the fifth day. But then on the sixth day, the last day in the sequence, he got a win. Boom. So he missed the first 3 days of losses, but then he did incur day five or day four and day five of losses, but then he won on day six and got a huge win, as you can see right there, 10K win. He did have to cover those losses, $3,000 of losses, but ultimately made 10 grand as gross, right? And then here's another one, and so on. Here's another little sequence. So just so you guys, so any questions on the Reaper? Yeah, first let's go check out those statistics, guys. Look at this. Win rate goes from 27% to 52%. Okay, so now you've got a high, a positive win rate. So you're winning more than 50%. You're basically winning 50% of your trades. Okay. In the last 3.5 months, the Reaper has only taken 21 trades. 11 of them were winners and 10 losers. Okay. And he has a gross of 48K, a loss of $7,500, and a net of 41. So it's like he just doesn't lose very much, which is kind of nice. The average win on the Reaper is $4,413 on each trade. And then the average losing trade for the Reaper is $750 loss, and for an RR ratio of 5.88, or 1 to 5.88 RR. Insane. So I want to start using the Reaper with one. I actually started a prop firm account last night that I'm going to start the Reaper on. But here's the thing. I already know beforehand that the Reaper strategy is going to require a high level of discipline, because only taking 21 trades in a month is difficult to do. Um, or 21 trades in 3.5 months. Sorry. Basically, what is that? Like 7 trades a month? 6 to 7 trades a month is what you're taking. Very few. Like so far in August, you would have only traded this, um, let's see, 1 night, 2 nights, 3 nights. You would have traded it for 3 nights in August so far. And then I guess tonight would be a night where you would start one. Um, and then in July, it took 1, 2, 3, 4 trades. All the trades in July were winners, though, which was kind of interesting. June, it took 1, 2, 3, 4, just 4 trades in June, right? So this is really a side strategy, but it could be your full-time strategy, assuming, like, again, this is a back test. This isn't actual trades that were taken, but well, they were trades that were taken. I did take these trades in my own account, just not with this multiplier and not with this concept of waiting 3 days for consecutive, waiting for 3 consecutive losses and then jumping in. But what I am finding out is if you wait for 3 days of losses and then you join the chat and you start trading, this guy has a much higher win rate, and the wins are just absolutely absurd because you're basically coming out and avoiding a lot of the losses and just getting the wins because you're much, much closer to that win. And so his worst, just so you know, his worst drawdown was 3%. 3% was the worst drawdown. The worst drawdown you could possibly incur with the Reaper would be, let's see, you technically could lose, well, it could still be kind of high. You could lose 2% times two. You could lose four on the last day. And then you could lose, what is that on the, you could lose 2%, and then you could lose. Okay, so the worst, if you lost 3 days in a row with the Reaper, you could lose maximum of 7% of your account. Okay, that's the worst thing that could happen. It hasn't happened yet, but that is a possibility. Just so you guys know. But the worst loss I ever saw in this back test was 3%. It was right here. This was the worst loss. No, was it this one or was it this one? I think it's this, yeah, $3,000 loss right here. Um, so this guy went from $4,500 of profits, or no, $5,000 of profits down to 2,000 during the drawdown phase. So he lost 3K and then got it all back plus a whole ton more, right? Great question. So Wes says, if I understand this strategy is traded in addition to the regular 1.5 strategy. So this one, I would not trade this in the same account. Okay, let's actually wrap up on this. This is great. Unless you guys have other questions. Really great question. Um, I would honestly just stick to what you're currently doing. I don't want to overwhelm you guys with stuff. I just get in trading ideas all the time, and awesome opportunities. And I talk to you guys, and you guys teach me awesome stuff too. I wouldn't overwhelm yourself with stuff to do. I would honestly, for me, I would prefer you stay disciplined to whichever sequence multiplier you adopt and decide to trade with, whichever session you decide to trade with, whether that's through London, New York, or Tokyo. Stay consistent with that. I would rather have you do that. Now, if you want to do the Reaper in a demo account to back test, or I guess forward test, highly recommend that you do that. but do it in demo. Like your whatever your prop firm account or your live account that you're trading, just stay with the one strategy that you've chosen to go with. If it's just the traditional overnight strategy, 1.5 multiplier, perfect. Just do that. Don't do anything else. I really wouldn't. Even just so on a side note, guys, on my own accounts, I have a prop firm account for every strategy that I trade. So my overnight strategy at the 1.5 multiplier has its own. I have another prop firm challenge that's doing the 1.25 multiplier. It's totally separate, keeping that thing to itself. I've got an account for just the weekly trades. I've got an account for price action trades. I keep them separate, guys. It's too much risk to try to throw everything in one account. You will fail your prop firm challenges if you overwork an account. Trust me, I've done it myself. I've seen other traders do it. Don't overwork a prop firm account. Just trade one strategy per account. All right. I think that's what I would do. But yeah, definitely do this in a demo to get started. And if you want to get into a prop firm, great. All right, guys. Well, great webinar. Thank you for coming. Have a fantastic rest of your evening. We do have COT report coming up here in a minute or two. So hopefully I'll see some of you guys in that call. Thanks for coming.